Hello everyone, this is Damien. I wanted to make this short video on ratios and Fibonacci retracements and what one could expect from a continuation of a correction. This is where we can define as technical traders how far an extension of the previous swing is likely to go before it reverses, and what could we realistically expect from a retracement and a continuation. So let's draw here a suggested swing here. This is a swing, make pretend, and we're going to draw a fib here, and this is, for all intents and purposes, a swing. These are possible correction points that this swing could potentially have. Now, to gauge how far a continuation move can extend, we will use our Fibonacci extension tool. So we'll take that and we'll draw it here. Now, as a general rule, typical market exhaustion points and reversal areas are somewhere between the 138 and the 161. Okay, so I'm going to go ahead and I'm going to draw a little rectangle there. As you may see in some of my charts, I draw these in just as a visual to help me easily see where my potential reversal area is. Okay, now does that mean the price will get there every time? No, absolutely not. But from a general standpoint, it's a pretty good estimation of traveling distance. Now, where we fall within this box greatly depends on how deep a retracement falls. The deeper we fall, the less likelihood we'll have of hitting this reversal zone. Okay, it also lets us know that a continuation of a trend, for example, it's likely to be coming to its end the deeper these retracements are. So a 38% retracement means there's a lot of strength in this move. You usually see that towards the beginning of a trend. You'll see that the retracements are shallow because there's a lot of push in that direction. As the trend progresses, price sort of, or movement sort of, gets exhausted, and you start seeing these retracements get deeper and deeper and deeper, and that is your first technical indicator that this trend is not healthy, is not going to continue much longer. I'm going to draw some different retracement points here so you can see what I mean. We're going to take the first one and we'll make it a 38%. We'll take the second one here and make it a 50% retracement, also known as the pivot. We're going to take another one here and we're going to take it to the 61%, the golden mean. And we're going to take the other one here into a very deep 78% retracement. Now, in harmonics and in trading, we would expect that swings are close to equal distance from the swing that we're measuring. So the expectation is that price to move an equal distance, okay, as this original swing. Okay, so we're going to go ahead and take this and we're going to measure it out. And we're going to copy and paste it, okay? And as you can see, if we only achieve a 38% retracement, we get that nice 161% market exhaustion point and reversal. The deeper we go, it starts getting shallower and shallower. We're still well within our box. And the 61% gives us the top side of our box, the 138% exhaustion point, which is, this is the most common area. Most retracements occur somewhere between the 38 and the 50 and the 61, which is why I draw this cube here. Okay, now when you get a very deep retracement such as this, as you can see, we barely achieve the 27%, the 127 extension point. Excuse me, I have to take a call. Okay, so the deeper we go into this retracement, the less we can expect for price to continue moving. Why? Because we have a lot of obstacles here. Price probably found some support or resistance in these levels, and every time price hits support or resistance, it takes some steam or some strength out of the force that was driving it. We see that in all charts and all swings. and it has to overcome this swing low, which is a pretty strong and defining support or resistance. There also could be some structural support or resistance way back in price action that could be interacting with some of these levels. So the deeper we go, the more obstacles it finds, and the less likelihood that we could have a sustained and defined move into this reversal zone. And that's something to keep in mind. Anywhere in the 38 to 61% retracement, very likely to achieve this. At any rate, from a profit taking standpoint, if you were to take a trade in any one of these and you want to get a really high probability of achieving a profit target, the 127 will almost always get hit on a retracement off of this and a break of the zero. The 127 about 90% of the times will be achieved. So the deeper you are, the better your risk reward, which brings me to my next point. Ideally, you want to be taking trades to short a market like this somewhere in this zone, because your risk reward, I mean your stops would normally have to go above structure or this swing high. So you're risking somewhere in this neighborhood to make somewhere into this neighborhood or this neighborhood. So from a risk reward standpoint, you can see that if you take a trade here, here your risk reward, although still favorable, because you could expect pretty much a 161 off of here, but although favorable, it's still significantly greater than if you take a trade somewhere in the zone. So bear in mind, you want to look for deep retracements when you're taking short. This is what I call an aggressive C sell, according to my rules of engagement, because yeah, you have a high probability or I shouldn't say you do have a high probability, but your risk reward is the greatest taking a trade into the zone. And it is considered an aggressive. Taking a trade here south will be considered aggressive only because you're above the central pivot line and you're above the 61%. However, risk reward wise, it makes sense. And you're going to be right more than you're going to be wrong if you're in tune with harmonics and price action, because you have other areas of confluence and you have other structure telling that it is safe to take a trade here to the downside. So I just wanted to leave that in your mind and let you see how I look at retracements and what they mean to me, and as far as from retracements and projections, what one could expect and what one could achieve in the world of harmonic trading. Thank you for watching this short video. I apologize if the content was a little boring. This is my first video, and I hope to be able to make more and get better as time progresses. But I hope this is clear enough for you. If you have any questions, feel free to email me, and we'll address them one by one. Thank you very much, and that's all.